Good morning, everyone. It's a really great pleasure to be here today. And I can tell you, normally you would expect from a central banker, I would say rather very technical, data-driven, structural presentation. You will get some of that. Nevertheless, in preparation of this conference, I sat together with the team and I asked them to be a little bit more political. And that is because we're living in political times. And I'm really happy that we're all here together and that we can really discuss the future of digital money in Europe and obviously in other regions around the world. So I think there's supposed to be a presentation, right, that I can click. Should I?
I'll check real quick.
No, that's okay. I'll take a step back. Do the magic.
That should.
Okay. Again, as I said, ladies and gentlemen, it's really an honor to be here today and to discuss a topic that is not only timely, but also crucial for the future of our financial system, and that is digital money for a digital ecosystem. As we gather here, we are all actually acutely aware of the challenging geopolitical landscape that surrounds us. The world is facing unprecedented shifts, and these changes are influencing every aspect of our lives, including the financial markets, of course. The digitization of finance is no longer a distant future. It is our present reality. And this transformation brings both opportunities, of course, and challenges that we have collectively to navigate with foresight and innovation. And I consider it a distinct privilege that today I can deliver the opening keynote here in this round, because this conference marks a significant milestone as we come together to explore the future of digital money and its role in shaping, and you will hear that word a lot during my presentation, a resilient and forward-looking financial ecosystem, because that is what is on central bankers' minds these days, resilience. In this context, and we have heard about that by the two of you already, the Bundesbank and the Euro system have a unique opportunity to take on a leading role. We consider this really an opportunity. We are actually believing we're at a pivotal moment where we can set global standards in payments and work towards redefining a financial market ecosystem that is resilient, you heard it again, and forward-looking. We believe that by embracing digital money and leveraging our collective expertise, we can shape the future of Europe's financial landscape and ensure it remains competitive even at the global stage. So what I'd like to do is I'd like to invite you to explore with me how digital money can serve as a cornerstone for a robust digital ecosystem. Together we will examine the potential it holds for enhancing resilience, autonomy, and efficiency. We will also consider the strategic steps that we need to take. So thank you for joining me. I'll take you on a journey now through the digital euro on the retail side, which is, as you highlighted, is a very hot topic these days, in particular in Brussels. But obviously, I'll also talk about wholesale CBDC, because for me, those two go together. And you will realize, and that was also mentioned by the two of you, that actually we're talking a bit about a triangle here. It is retail CBDC, it is wholesale CBDC, and it's also how does B2B fit in there? That's a question that we'll have to answer. So, if you look at digitization in general, it actually has rapidly transformed our lives. And what we see is that Europe still lags behind. I mean, that's our reality in terms of embracing the potential that we have. However, despite these challenges, I think there are still a number of compelling reasons, and we have every reason to remain optimistic. So you will not hear I would say, a complaining speech by me today, but you will hear what I see as a very strong opportunity for all of us in challenging times. So I remain optimistic. And that's a lot for a central banker, I guess. So what I'll do is I'll briefly focus on one promising area where Europe is already at the forefront of digitization, and that is the digital euro. And later in my speech, I will, of course, address wholesale CBDC and how we are going to make progress there. As I'm sure you're all aware that the euro system is hard working at actively exploring both. Right? We really have been at the forefront, which is actually quite surprising. Usually Europe is not known to be at the forefront of innovation or changing, the future when it comes to digitization, yet we managed to be there. I think recently we also started collaborating with market participants to identify relevant B2B, that's what you already mentioned, use cases which actually aim to foster a new ecosystem. And this is why we chose the title. It's not just digital money for specific processes that we have today, but it's really thinking about digital money and how it can be used in a digital ecosystem that we're going to expect. And I'm a firm believer that CBDCs are the next big thing. At the political level, we perceive that the digital euro has gained further importance, also due to current geopolitical challenges. And this is reflected, for example, and you might have seen that, the statement by the EU heads of state and government last week. And that was actually a pretty strong statement that we saw by the European Eurozone heads. And it said they were calling, of course, among other things, to get progress on the project. They actually urged that we get our things done. And I think just a few days later, ECB President Lagarde emphasized in a hearing, and she was at the Committee on Economic and Monetary Affairs of the European Parliament, that the euro system, she was very precise, she said, we'll stand ready, we will have completed our homework from a technical point of view, from a financial stability point of view, from a single rulebook point of view in October. So she pretty much made a strong promise that the euro system will get its act together. But as you're all aware, there will be no digital euro without the legal framework that we need. So it was basically a clear signal towards, in Brussels, toward all people there, all decision makers, everyone that prepares this, that they should also intensively work on getting the basis done. Bundesbank, in that role, we're actually committed in this transformative journey, and that is we are part of the Eurosystem internal consortium, and we're actually prepared to contribute significantly to the development and provision of the core components of the infrastructure for the digital euro. And I think this commitment underscores our dedication to ensure that Europe remains at the cutting edge of digital innovation. But what are we actually aiming to achieve by introducing a digital euro? And I get that question a lot when I speak. Why do we need this? Where is the use case? I'll have some answers for you. And we are, I can say, more convinced than ever. So let me start and share a few of them. In an increasingly digitized society, it is essential that we adapt to the changing needs and demands of consumers. Simply, right? There are consumers, and we might rethink our payment services. That's just a simple reality. So in a nutshell, there's 3 key motivations that drive us. We sometimes like to summarize them: resilience, autonomy, and efficiency. That's what we are looking for. Let me start with resilience. With the digital euro, we're aiming to enhance the resilience of the euro area by securing the anchor function of central bank money, thereby creating the foundation for our independent monetary policy. And we have seen how important that was during the last 2 years in particular. And in light of recent political developments across the Atlantic, it is actually now more essential than ever. And with that, I mean together as a united Europe, that we take action in order to prevent market disruptions. We can't rely on others. We have to be sure that we are capable of handling situations ourselves. So this is resilience. Second, the digital euro is essential in order to actually improve for us our autonomy. What do I mean by autonomy? What we have seen, the trend, so the consumer, the trend towards digital payments is making us increasingly dependent on non-European card systems and big techs. I think we all know who I'm speaking of, all American companies. So the digital euro offers a European alternative, thereby enabling us to strengthen Europe's autonomy in payment transactions. And in view of global political developments, it's actually vital that we become more independent and actually dare to embrace more Europe. That's what we need. Third, there's the issue of efficiency. Despite a number of initiatives in the past, almost 25 years after the introduction of the euro, actually, we still do not have a pan-European payment solution in place. We have a very fragmented landscape if we look at the 20 Eurozone countries. And what the digital euro aims to reduce is this fragmentation, and it aims to simplify cross-border payments. Common standards also help to increase competition and efficiency. European providers could thus regain share in the payment market without high investment costs, actually. And I assume this issue will be discussed in greater detail in the coming panels, because I'm acutely aware of all the discussions that I have myself on this topic. The next topic, which I think is increasingly important, and I mention it, is the B2B. Right? Because if we're talking about a digital ecosystem, it doesn't stop at certain use cases, but we have to think it all in once. So if we fully want to leverage the potential of the evolving payments landscapes in the area of CBDCs, last October, the ECB actually organized a special focus workshop on innovations in B2B. And you mentioned that, Anne-Sophie, that it was actually a one-of-a-kind platform to learn more about the potential use cases of the market. So what I really like about the progress that we're making on the different topics is we are engaging very strongly with the market to really understand. Of course, we have a clear central banker's perspective on the things that we do, but when we think about digital ecosystems, we really believe that this is a collective endeavor that we are going on, and that we need to understand what the different needs and interests are. We have right now the innovation platform that is still ongoing to collaborate with stakeholders. And what we have seen, and you mentioned that as well, is that we actually looked at conditional payments, which I think is very important. And it was a step, as you said, I don't think everyone expected that we could ever do that. So much for the retail side of things. Let me switch to wholesale now. When we're in a digitized world, obviously it's not only about changing needs and demands of consumers. No? We also rethink our payment services for the wholesale financial market transactions. In particular, it is and will remain essential that we are able to settle transactions in central bank money using new and innovative technologies such as DLT. Why is that so important? We know that today, following the principles for financial market infrastructures, large transactions are supposed to be settled in central bank money. So if the way transactions and assets change, we actually believe that as central banks, we have to provide something that fits the developments. And this is why we are so keen on Wholesale CBDC. So what, on the one hand, we see that the market, so a lot of you, have recognized the potential of DLT for settling financial market transactions, especially with tokenized securities. And on the other hand, we have seen legislators, and in Germany and Europe, support the potential of its technologies with regulations like the EWPG, that's the Electronic Securities Act, and the DLT pilot regime. So we're seeing regulators doing the job. We're seeing the market is really going forward. And what that means is we see an entire ecosystem evolving around the tokenization of such securities. And like these financial players, we, as central banks, see significant benefits in the use of new technologies. So the advantages of DLT, such as automated settlement through smart contracts and reduced reconciliation needs, I mean, that's a pretty clear benefit here. But if we really want to harness the potential, we need to think further. And what we are seeing is a clear preference on the part of the market for settling DLT-based transactions in central bank money. That is actually what we get. They say, okay, we're developing the asset side, but we would actually like you to find the perfect match for us, and that is the cash side. Shall I get this closer to me? Yeah, I can do that. You should have said something, raised your hand. And now I'm saying something where I look at you now. From a financial stability perspective, we would always prefer a wholesale CBDC, obviously, over a stable coin. But more so over crypto tokens, to be honest, and over tokenized commercial bank money. So I think I'll leave ample room for you to discuss later why it is so much better than wholesale CBDC. And as I said, for us, it is really about thinking how will a future ecosystem overall in a digitized world look like, and how will all of these things fit together. However, when we think of large financial transactions, for us, it is to be done in CBDCs, because it is secure central bank money that is needed. So we are therefore working on developing something. And for us, CBDC in this world will really be a game changer. Right? And this is why, and you said it in the beginning, we have been surprising the market a bit because we had focused as the Eurosystem so much on delivering on the retail digital euro that sometimes is overlooked that in the background a lot is going on. So because it was just on the agenda and everyone could see it so clear and everyone was talking about it, and this is the difference between the two topics. I think when it comes to retail digital euro, basically everyone has an opinion, and it is a public topic. When we're really talking about wholesale CBDC and technology in that space, it's more a topic for experts, and that means it's also not as detailed discussed in that sense. So, if we look back, in 2009, DLT was basically introduced, roughly, right? 2009, it became very well known. But yet, we cannot consider it a mature technology. Right? I mean, that's over a decade ago, but it is not yet a mature technology. And what we're looking at is, and this is why I've brought you this chart, is that current use cases are merely aiming to build existing business processes on a new technology, especially for security settlement. That's DVP and cross-border payments when we're talking PVP. And for the time being, the vast majority of use cases reflects DVP transactions. That is where we see the bulk going. As the market participants, you seem to be very engaged in that field, which is a natural reaction because you're doing a lot on the front of digitizing assets. I actually believe that PVP will be much more prominent in the next months and years to come. We actually see, when it comes to PVP, some room for improvement, definitely, knowing that we have dependence on only a few correspondent banks, and we have sometimes cumbersome transaction chains, and that makes cross-border payments opaque, makes them slow and expensive. If I look at that chart, what I see is that we're trying to replicate what we have with new technology and simply trying to make it better. That would only be a technologically driven efficiency case. What I would like us to do is look on the right side of that chart. Because if we really want to reap the benefits of new technology, we have to really think of a vision of future financial markets. Because I'm not completely sure, and we haven't seen completely scaling cases of DLT for infrastructure that we already have today. So we really have to go beyond that and really ask ourselves, where do we want to put the use of this? So for us, wholesale CBDC is something that we see as part also of a new market infrastructure to evolve. Because the fundamental idea of DLT for us goes beyond making just the cash leg more efficient. Honestly, RTGS settlement is pretty efficient today already. So where is the case, right? So for us, it is about shaping a new financial market infrastructure on the basis of holistic platform with assets, cash, and information. And this is a very recent research topic. And to be clear, I think we need first clarity on where we want to go. So, vision always sounds like something very blurry sometime in the future. So you need to get there, right? So what has happened in the Eurosystem? I think a first step on the journey to a new financial architecture was actually the exploration phase that we were doing. Over 6 months, the Eurosystem tested 3 different solutions for the settlement of DLT-based applications in close collaboration with over 60 market participants. So that's what we did. That was basically our own prototyping, so to say. And what we did as Bundesbank, we actually started quite a bit earlier. We already investigated the possible application of DLT technology, and I think you will remember that, the Blockbuster project, and that was in 2016. So there is quite actually a history in working on these topics and trying to understand where we want to go. A second solution, and we had the trigger solution you're all aware of, and I see many participants, and thank you for trying it out so intensively. That was actually a great experience for us as well. And the second solution tested was the TIPS hashlink solution by Banca d'Italia, which is also based on a bridge that connects the DLT world with the Eurosystem's real-time payment system TIPS. And the third solution that was tested was the full DLT interoperability solution, DL3S, by Banque de France. And this solution actually allows the settlement of wholesale financial transactions in central bank money in a DLT-based account held on a DLT platform provided by the Eurosystem. See, that's the fact part. So the so-called trigger solution, like the ones developed by Bundesbank, they form a bridge. So how do they function actually? The Bundesbank's trigger solution connects DLT networks with the existing target services, the T2, which is, as I mentioned, a very proven RTGS, so real-time gross settlement system. And this solution translates information from the DLT into the RTGS-compatible payment messages. After the payment is executed, so what happens next? A confirmation is automatically sent to the DLT, where the original transaction is finalized through, for example, the delivery of the securities if we're in a DVP case. The intermediary infrastructure acts as a trustee in that case, controlling the transaction process and ensuring the simultaneous settlement of goods and money through delivery versus payment. The trustee function could be fully automated technically through a smart contract functionality. So furthermore, the Bundesbank's trigger solution enables the connection of different DLT protocols and networks, right? So this is what we were aiming at. And I know I'm a bit technical right now, but I think it is very important when we talk about these topics that as much as we need a vision, we need to be clear on what we are doing today and how we are doing it. And I think what we have seen with the exploration phase, it was very important to have the market's commitment and willingness. And that is a big thank you on behalf of the Eurosystem here to the market to participate so actively and try out and work so closely together with us. Following the exploration phase, so what are we doing now? We learned a lot. And I think the whole point was, okay, are we done now? Have we learned enough? What's going on? And this is where what you see on this chart, the 2-track approach comes in. What we are doing is we will work in 2 streams. One, the track 1 is the short-term solution, as we would call it. And track 2 is the long-term. So what is the difference? Why do 2, right? I think there is a very simple answer to that. Time. If we want to make sure that we don't lose out on the momentum, we have to deliver something rather fast, because what we know is that the market is moving on. You are continuing with your developments. And if we want to make sure that wholesale CBDC is the answer to what you're doing, then we need to provide something. So this is why we're talking about a track one and a short-term solution. Yet, I showed you the chart where you saw, on the right-hand side, the vision. We need to do our homework there as well, of course, right? We cannot simply stop and say, okay, we have one thing that figures a few, that solves a few of the issues that we have identified. We need something where we really think in terms of what should future market structure look like. And that's track two. So what you will see is probably in the track one, and I actually recommend, and it's not as dry as it sounds, reading the press release from the Eurosystem, because it explains actually very well how we are, from a governance perspective, are also going to go about it, right? How are we going to handle the process? For me, the biggest difference, if I look at track one and track two, is that in track one, you harness what you have learned. And I deliberately mentioned all three solutions, because I think there's merit in all three of them, and it is up to the Eurosystem to provide something where we say this is combining, if we combine it in a building block approach, this is the best that we can deliver right now, right? That would be an approach maybe tiny bit untypical, not going through year-long processes of defining all user requirements, etc., but rather working with what you have. Because what we have seen is how the market interacted with what we had offered through the three central banks. If we look, however, at the track two, it is really about doing your homework in understanding, is market infrastructure going to change in the long term? Right? And how do we think it is going to change? Do we expect new players in the market, etc.? So there's a lot that we have to keep in mind when we're talking about track two. And knowing that technology is never built in one day, we have to make sure that with track one, we deliver rather quickly. And with track two, we'll be very precise and discuss what we need and want. So what we need is for track two, actually a deep analysis, right? And this is where we probably will be feeling very comfortable with as central banks when we go back to that. On the other hand, I feel, and that is what we have seen with many exchanges of you participating in the exploration phase, I think we got a good understanding how it worked, what worked well, what you liked, what didn't work well, where there is room for improvement. So I think we have a fairly good starting point. And for me, when I look at Europe in that regard, I think we were actually surprisingly ahead of things. That's not a standard for Europe to be at the innovative front, right? So let me come to some concluding remarks. The development of a new financial market infrastructure can be an important contribution to enhancing European capital market efficiency. And this could actually help, as I mentioned, integrate the current market fragmentation that we see. Resilience and autonomy are vital in the face of current geoeconomic fragmentation. And what we see, the trend of withdrawing from international cooperation, exemplified by the Trump administration's termination of all CBDC collaborations via executive order. I might want to repeat that, actually. The termination of all CBDC collaborations via executive order. I think that was a very, very strong decision taken there. And what does it mean for us? How does it resonate with us? Well, for us, it says now more than ever, the Eurosystem and Europe as a whole have the opportunity to take a leading role by presenting a united front in the spirit of European solidarity. The swift implementation of a productive wholesale CBDC solution is essential in order to maintain the relevance of the euro in the international monetary system and to secure its leadership. This is not just a technical topic. The euro is a relevant reserve currency, and its role and its strengths also determines how monetary policy can actually function within Europe, and we need it. And if we fail to do so, this could actually jeopardize the credibility and the reputation of the euro system. So actually, we feel quite pressured. And if you look at the recent Genius Act that aims to regulate US payment stablecoin industry by setting, and they're very precise on setting clear licensing and supervisory requirements. It's balancing federal and state authority. It is light touch regulation to a certain extent. It is not passed yet, to be clear. It's as many things that we hear from across the Atlantic. It's something that is said, but it doesn't always get executed. But it's on the table, so could be done, right? So if passed, it could create a uniform regulatory framework for stablecoins and advance the role of digital assets in the US financial system. And that's actually the intention behind it, right? And while the impact on Europe is uncertain, a better regulated US stablecoin system could make US dollar-backed stablecoins more attractive internationally, outside of the US, even as a settlement asset. And I think that point makes very clear why we are concerned about that, right? It is essential that Europe develops an innovative and market-demanded wholesale CBDC solution to maintain sovereignty and autonomy here. So Trump's withdrawal from international cooperation should not leave Europe disheartened. Pretty clear. I said it in the beginning. I'm optimistic. I think instead we should view it as a positive wake-up call and seize this opportunity to take meaningful action. At the Bundesbank, we certainly see this as a call to action, as confirmation that we should continue shaping the future of the euro. For us, it's pretty clear where we are heading. And it goes without saying that such a complex journey towards the introduction of the CBDC does not come without its fair share of challenges. So that's not going to be easy. But I believe we can overcome these challenges, individually and collectively. Thank you.